Hello traders, Gary Wagner here, just about 10 o'clock in Honolulu, 4 o'clock in New York on Thursday, the 26th day of March, 2015, and this is the Daily Report for Gold and Silver. Following unrest in Yemen, we do have the precious metals trading higher across the board. Gold currently up about $8 on the day, $1203.40, $1204.40 bid-ask spread. As I said, putting it up roughly $8 on the day. Now the high, and that's very important because we did recommend an OCO order, a high 1218.20. Low, also important because we will be sending out a trade alert raising our stops, but the low 1198.30. Silver also trading higher on the day, but up only about a dime, well off of the low. You can see this high right up here, which is about 1735, so roughly 15 points from our target of 1750. The low 1698. We will be raising stops also in silver on this special report, today's daily report of the gold forecast. So traders, I want to start today's show by looking at a short term. This is a half a day, 720-minute candlestick chart. And if you recall from the first day that we actually put this trade on, I made a suggestion that as we raise our stops up, we keep what's called a OCO order in the market. One cancels the other, and look to get out roughly at 1218. You can see on this chart, we've got a high of 1219.78, this being on the cash market. And so traders that actually took that call went long at 71 and actually got out right up here at the top, or close to the top, I should say, at about 1218 for a very, very nice trade. For those that are still trailing stops up and did not take the suggestion of an OCO order, and that's how we'll mark our trade here, still active and in the trade. For those that got out, we'll make a recommendation when we feel it's time to re-enter the market, but we're going to raise that stop. And to raise that stop, we really want to look at the range of the day and not necessarily an intraday chart. And traders, I've done just that. I've pulled up our daily chart, this being of the cash market in gold. And if we go to look at this recent low, as best I can figure, that low runs in at around 1194.81. So call it 1195 on the low, currently trading at 1203.57. And so my recommendation is to move our stops up to 1194. That's 1194 on a protective stop, in at 1171. And also traders, while we are on the subject of trailing stops up, we had our upper level target that we were looking at in silver at around, call it 1750. I'm really looking at these series of tops right in here. We came close, 1741. Let's take a look at this low of the day. Low of the day is roughly at 1694. So my recommendation in terms of trailing our stops up, of course, we're long at, I believe, 1613, is now to move that stop up to 1680 on a protective stop. So traders, now that we've got the business end, so to speak, put away, meaning moving our stops up, let's take a look at this market, what we're looking at and what we're seeing. Now, obviously, we talked about the fact over the last few days that our upside target is and has been about 1220, 1221. It is based upon this 61% retracement. And of course, the 61% retracement, when we put in two retracement lines, we're going to get a 50 and 61. We do have harmonics in both of these areas. We can absolutely see that the market attempted to move to that point, but was unable to breach that in any way. However, at the same time, we can see that the former level of resistance, and when I say resistance, I'm talking about, if you look at this daily candle that just kind of touched up to that point, meaning 1200. We are now over that point. So my sense is that what we should see is 1200 per ounce become a supportive area in terms of our current price of gold. And by putting our stop at 1194, of course, we're in at 1171, so it protects some of the profits, except for maybe $10 in terms of the range here. You might want to consider, again, putting this OCO order in to get out should the market clip back up to that point and maximize profits on the trade. But when we look at the environment out there right now, meaning the real hotspots developing in the Middle East, there is a reason that we could see this market move higher. You can see on the MACD, it is still pretty much moving apart. That's important. We absolutely caught this particular crossing point, and that's, of course, pretty much when we entered the market. But what we want to do at this point is to see if gold, in terms of a price point, can find some realistic support in this area. So traders, obviously on a day like today where you're getting this move to safe haven type investments, yes, gold is one of them, but so is the US dollar. So we're getting a push-pull effect with normal trading in gold, although we're up $8.60 here, or $8.20 according to our current print. $14 to $15 of that is actually buying in the market, and a strengthening US dollar is taking away about $6 of that. So you do have that salmon swimming upstream again, so to speak, with a stronger dollar. So when we look at the dollar itself, this is our weekly chart. You can see the dynamic range it's had. But if we take a look at the daily action within the market, you can absolutely see we've had oscillating candles, meaning higher dollar, lower dollar over the last 3 or 4 days. Lower dollar, higher dollar, lower dollar, higher today, up at 97.50. But when we combine that to really get take a little bit of the noise out, you can see where this market's sitting. But there's no doubt we absolutely have a stronger dollar today. And traders, one thing is absolutely clear. This is the weekly chart of crude oil. We have crude oil back dynamically over $50 today, a tremendous move in the market today. And not really a shocker when you consider the fact of where Yemen is located, the fact that the Saudis have sent in planes, and there is absolutely a hotspot developing in that area, critical oil area. When we take a look at our weekly oil chart, I draw your attention to these last 3 weeks dynamically in terms of a technical candlestick pattern, Three River Morning Star. But at the same time, if you look at where the market was just prior to the fall on the weekly, you get really, it's a piercing line, almost an engulfing bullish here, because I don't think that the close on this particular week went above the trading range of that prior week. So you'd call it a very, very strong piercing line. It only moves up for a couple of weeks, and then you get this Three River Evening Star dynamics coming into the market. And what that tells me, of course, it looks as though we are breaking out, but I don't really see any defined breakout in the market unless we see oil break above these most recent highs here, and those most recent highs here would be at around $55 per barrel. So we've seen this activity before, only to get stalled and then move back down. In other words, it's really dependent upon what we're seeing currently in the Middle East. Again, special trade alert will be sent out today with this particular video to go ahead and raise stops. $11.94 in gold, $16.80 in silver. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for the weekly wrap-up and review. Bye-bye.